How do you describe to somebody how hard it is to build a house today?
It's easier to build a McMansion in the United States than it is to build affordable housing for people.
I have a hard time wrapping my head around how this happened and why we're here.
I will not sugarcoat it. Our housing deficit is significant and needs significant public sector capital and private capital to get us even moving in the right direction.
3 million, 5 million, 7 million? Exact estimates vary, but America has a severe shortage of homes. And in some parts of the country, it's even more extreme. Cities like Chicago, Miami, Honolulu, and New York have some of the worst shortages in the country.
Fresh data shows the cost of becoming a homeowner is increasingly out of reach for many Americans.
Home sales in 2024 fell to the lowest amount in almost 30 years.
Home prices are climbing.
People can't afford the mortgages. It's become unsustainable.
Rents have steadily increased, but household incomes haven't kept up.
According to Zillow, in January, the typical asking rent was close to $2,000.
And Wall Street has become a significant player in the housing market.
Why are rents rising so much? Big Wall Street firms are playing a role.
But will these large financial institutions help solve the crisis or make things worse? We're about to go talk to Don Mullen, who was one of the key traders that bet against the mortgage market and big financial companies leading up to the financial crisis in 2008. We're interviewing Don Mullen on the High Line because he was one of the early investors, and it helped kind of revitalize this area in New York City. So we're gonna talk about what makes a good neighborhood and an investable neighborhood for people like him. So, you grew up in New Jersey.
Sure. My parents and I live with my grandmother in a 2-bedroom apartment. We lived on food stamps for a while. We never had any money. My parents like to tell the story that when they got married, they had like $25 in their bank account, and my mom bought a bathing suit with it. And that was there, and then they were broke.
Mullen got his first summer job in finance while at college and quickly shot up through the ranks of investment banking. You have always been one of those stories that so many people have not heard about on Wall Street that became very large over a matter of time through...
Well, it's a long period of time since I'm 67, so it wasn't like it happened suddenly.
Well, some of those moments were kind of more publicized and in front of the world than others, 2008 being one of them.
Sure, not everybody gets their emails read in front of Congress.
In 2010, Mullen's emails were read at a Senate hearing as part of an investigation into whether key financial executives prioritized profits over the stability of the housing market during the 2008 crisis.
Goldman Sachs made quite a bit of money when Moody's credit rating agency downgraded $32 billion in BBB and BBB minus bonds. Donald Mullen emails you and says, "Sounds like we will make some serious money."
As an executive at Goldman Sachs, Mullen had a front row seat to the 2008 housing crisis. While Goldman was selling mortgage-backed securities to clients, and many financial firms were chasing after these risky assets, Mullen's team bet that they would fail. And fail they did. This pivotal moment in the crisis was later immortalized in the film, The Big Short.
So you're offering us a chance to short this pile of blocks. How?
With something called a credit default swap.
So you knew years before the world knew that the crisis was brewing, or at least some problem was brewing?
Something bad was going to happen, and chaos would ensue.
So you're kind of like the character in Big Short that nobody knows about.
Well, I'm kind of a nerdy guy, so that makes sense, right?
In the fallout from the crisis, home prices cratered. And that's when Mullen saw an opportunity, buying foreclosed homes and converting them to rentals. You helped lead The Big Short in Goldman Sachs, but then on the way out, you took $25 million of your own money and you started buying up houses when they were at very depressed prices.
Yes. Tens of millions of Americans were not able to pay their mortgages. So what I start to do is I start to travel to all the places of high default intensity. I went to Tampa, Riverside County, Las Vegas, and Phoenix, and I walked neighborhoods where there was like a bunch of houses were in foreclosure. I looked at it and said, we have a lot of defaulted houses. There's people who need to rent those houses, and so repurposing those houses for rentals could be very good for both the economy and for investors.
Mullen left Goldman to start Pretium Partners, which quickly became one of America's largest corporate landlords. There used to be the American dream, which had home ownership as a huge part of that dream.
But I'd first say, why is buying a home the dream?
Well, let me give you my mother's argument.
Okay.
Why are you paying so much money in rent, Shonali? Why aren't you buying a home and building wealth instead?
Totally. That was a phenomena that is a relatively recent one in the terms of American history. But it had secondary effects that weren't always good. Reduced labor mobility. If you look, we're at the lowest level of labor mobility in like modern history because people are locked into their houses because of low mortgage rates. But also, how about the fact that how many Americans have lost money because they bought a house?
How many?
Everybody in Detroit, lots of people in Cleveland.
Today, the number of renter households in the U.S. is growing 3 times faster than homeowner households, signaling a major shift in American homeownership. This trend traces back to the 2008 housing crash, when construction slowed dramatically, and the U.S. never caught up. Restrictive zoning laws have limited where and what kinds of housing can be built. The cost of raw materials has gone up, coupled with a labor shortage. And in the last 5 years, mortgage rates have more than doubled due to inflation. This has all led to historically high home prices that are out of reach for most Americans without significant capital. So more people are renting for longer. And this has been good business for corporate landlords like Pretium. But their business model has faced significant criticism.
Today, dozens of people confronted corporate landlords demanding livable and affordable housing.
All of this attracting Wall Street money. Big companies like BlackRock, KKR, JP Morgan Asset Management, they're buying these houses, renting them out, and squeezing out first-time home buyers.
People talk a lot about private equity home ownership these days. People are really worried about it. How do you gauge if it's better or worse?
I think it's better. Why? The people often focus just singularly on an individual family who wants to buy a house, and we have the greatest respect for that. What I feel upset by is the way we treat the renter. We're having the opportunity for people to rent houses in aspirational communities. This is one of the greatest tools for people who, more often than not, if you look at all the residents in our 90,000 houses, most will never own a house in their life. The combination of their FICO scores, the combination of their student loan debt, the way their life turned out for some reason, they will be renters. But they can still raise their children in great school districts. So as a result, from our perspective, we created more access to better communities.
So how do you think about what is economically viable in terms of housing development?
Sure. We focus on housing vouchers. That's where people who have like 30% area median income can move in to those aspirational communities. We had a test case of it in Atlanta where a public housing project was condemned. And so the mayor and the FHFA asked us to help them find answers for 60 families. We were able to move a goodly chunk of them, and they ended up living in suburban communities with better schools.
The share of single-family rentals owned by institutional investors varies widely by city, but their presence is especially strong in the Sun Belt. In Atlanta, for example, companies now own roughly 25% of all single-family rental homes. Atlanta has a higher than average percentage of institutional home ownership. Why is that?
There was strong demographic growth, and there was a tremendous demand for housing too, for new construction. And unfortunately, it had an explosive growth during the last 08 financial crisis. So there was a lot of houses in foreclosure. So lots of individuals and businesses bought homes there.
In 2012, institutional investor Blackstone kicked off a trend of buying up homes in Atlanta. and home prices there have since skyrocketed. What do you make of the argument that people have that institutional capital comes into a city and it forces prices higher?
The data does not hold that.
While some studies do tie institutional homeowners to rising home prices, a recent analysis observed no consistent correlation between investors' share and price movements. While other reports say that investors might have been better at choosing neighborhoods with growing housing demand, so home prices might have risen regardless. But for now, the national market share of institutional homeowners is still relatively small. So you're a very large homeowner, yes, but more than 90,000 homes in...
Drop in the ocean. Institutional home ownership is less than 3% of homes rented.
If it's 3% or less than 3%, as you say now, where is it in 10, 20, 30 years?
Well, I mean, we need acceptance of this as a good answer for Americans, not the false narrative of this making it harder for people to buy a home when it's actually a good outcome for people who can't or choose not to. And so from my perspective, you won't see the industry grow until that is put to the side. Generally speaking, though, we as an industry have been providing our capital to home builders now for rental communities. I think renting is for most people a journey, whether it's a journey for their children so they own, or mostly I prefer that everybody has the opportunity to own as long as they own a house in the right place that's going to create value for them.
People need somewhere to live. Right?
Absolutely. I think that's the most important part of this whole thing. More capital needs to go into the business to build more apartment buildings, more houses. If you want to have housing, you have to unleash capitalism. There is nothing better, but it has to get a return.
Margaret Anadu has dedicated her career to addressing the deeper structural issues behind housing inequality and access. Anadu spent nearly 2 decades at Goldman Sachs, where she was chair of their Urban Investment Group, a specialized team focused on impact investing, including preservation of affordable housing. Today, she's a senior partner at Vistria Group, where she focuses on investments that deliver both financial returns and social impact, particularly in affordable housing. Vistria recently raised $2.8 billion to advance that work.
I am taking you to an amazing building up in the Bronx, one of the first investments in the strategy. This building that you're actually about to see was built under, gosh, one of New York City's oldest affordable housing program. I don't know if you're familiar with Mitchell-Lamas.
No.
So it was funny because Tim Chalamet said it in an interview recently.
I grew up in a Mitchell-Lama. You know about Mitchell-Lama?
Oh yeah, the restaurant stars or whatever.
No. The Mitchell-Lama is
Mitchell-Lama program provides affordable rental and cooperative housing to moderate and middle income families.
Yeah, dude, wow.
It's called a Mitchell-Lama because those are the last names of the specific state senators that created the legislation. But it created over 100,000 units of affordable housing between the mid-50s and the late 70s, and roughly a third of them are already gone. We're losing units every year because the regulations expire and because they're not in good condition.
So if I know anything about you, I do know that you did this because it's a job that you love to do, but you do this because it's personal to you.
It is personal. Housing it's everything. It's so determinative. It was for me. I grew up in a neighborhood in Houston, and I had to get bused across town to go to a good school. I woke up every day, and 30 minutes later, I was in a very different community with very different opportunities. And so from a very young age, I was always cognizant that some neighborhoods have a lot of just great inherent qualities that I learned later come from investment, and some neighborhoods don't. So it was kind of like luck and destiny in a way for me to end up at Goldman Sachs and have that really great experience in the Urban Investment Group and still be doing this work today. At Goldman, we had decided that we wanted to invest in underinvested communities like the Bronx, where we're headed now, neighborhoods in New Orleans, the south side of Chicago, all of these neighborhoods that have, you know, great communities, tons of promise, but just haven't really seen institutional capital. And so the idea that we were going to focus on those places, certainly with an eye towards returns and making money, but doing that while also being productive for those communities.
I think what is hard for me to wrap my head around is the fact that it used to be so much of the wealth creation for a household. Much of the appreciation and wealth that you would have is also the appreciation of your home price.
Definitely.
And it's not something that we have anymore.
I think that it's one thing, you know, for earlier generations who saw housing prices go up and up and up and up and up. So much wealth was in those homes. We all saw the financial crisis.
Right.
We saw those net assets wiped out. We saw housing prices decline significantly.
A home was
and
no longer
quickly.
a safe asset.
Yeah, and so I think that has created, you know, really better awareness and understanding that owning a home is not guaranteed wealth creation. It's just not. And I think that we think a lot about stable, consistent housing as home ownership. What I think we need to strive towards is being able to create that stability through renting as well.
How does the government step in to help fix this?
Affordable housing is just like market rate housing. You have revenues and you have expenses. And to make the housing affordable for families, you either need an intervention on the revenue side in terms of what the actual families can pay.
Like a subsidy.
Yeah, like rental assistance. On the expense side, you have state and local governments. They'll say, you know what, if you meet the policy objective of creating, preserving, improving affordable housing, we're gonna give you a break on the property taxes.
So what does this mean for investors?
Affordable and workforce housing is a place where they want to be invested. One, because there's just significant need. There's such a dearth of capital in the space. But two, when you can create and preserve housing that is affordable to all the folks who are like, you know, can't find an affordable place to live, what you have is tenants who want to stay there, who want to be there. So when you can figure out those partnerships and make those investments, you're getting really great returns, and it's also lower risk.
Public-private partnerships for housing have played a key role in providing affordable housing across the U.S. for years. But they're currently under threat from the Trump administration, which has been aggressively scaling back federal equity programs and cutting support for key housing initiatives.
A new set of federal cuts at the hands of the Trump administration will impact the number of grants the U.S. Department of Housing and Urban Development can offer to organizations.
So is private equity a bad thing for the housing market?
I think what's been lost in the conversation is on the multifamily side. Multifamily housing in the U.S. has been institutionally owned, built with private capital, financed and owned with private capital for a long time. I would love more of the discussion to be, how do we get some of those, quite frankly, same investors and entities to focus on the affordability of that housing? All right, looks like we're here. So the whole building is 318 units. We actually only have 2 units that we can see right now because it is 99% occupied, and if you came here tomorrow, those 2 units would probably be gone.
That fast?
Yeah. The rent is about $2,000 a month. So, I mean, people pay, I mean, the average 1 bedroom in New York City is more than double that. So this is very affordable.
So how are you able to make it that affordable?
It's the partnership with the city.
And you were saying also that this was at risk of no longer being affordable.
Absolutely. So one of the things I love about this building, it actually has really big units. So this is almost unheard of in New York, like a really nice size 3 bedrooms. There's the first bedroom, then the second bedroom, has a couple bathrooms. We actually just redid this one.
So what are we looking at over there?
So some of those were built under the same program that this building was built under. The unfortunate difference is many of those buildings are no longer affordable.
So what you're doing is really rare.
You know, I would say it's rare at the scale we're doing it.
While it's still rare for financial firms to lead with a social impact strategy like Vistria does, a growing number of major investors are expanding into affordable housing. Large investment firms like Blackstone and Nuveen have collectively committed billions of dollars to these initiatives in recent years. So if you did not buy this building, what would have happened to it?
So when affordability restrictions expire, someone can buy the property, remove the affordability, and then take it to market. And so that prices out the individuals and families that are living there. So we were able to do what you call preservation. And it's all part of the continuum of what we're doing around sort of private investing in the affordable housing space. There's new construction, of course, but there's also this important part about we have to take the affordable housing we have, like this, and keep it affordable.
Why do you think it's so hard to get people to invest in affordable housing?
I think there are a few reasons. One, I think it's changing. So I think that there's been more focus and institutional capital in affordable housing than I've ever seen in decades that I've been doing this. But I think part of it is their perception issues. So one, the idea that investing in affordable housing can be a sound commercial investment is something that people are now starting to learn and understand. Those public-private partnerships are really key. They are the core of everything we do, even the building we're standing in. And I think there are a lot of investors who just aren't as experienced in working with the public sector. It's not their strategy, and that to do affordable housing well, responsibly, profitably, it is about partnering with the public sector.
A lot of people look around and they say that, okay, Wall Street is the problem. They caused 2008. But at the same time, you need that money to come from somewhere.
When I think about the capital that is needed to both build many more units and invest significant capital into the units that already exist to bring them up to a better standard, to make them much more environmentally sustainable, we're not talking billions, we're talking trillions. The private sector needs to be involved and the public sector needs to be involved just for the amount of capital that it's required.
Right, there's a whole lot of money needed.
Yes.
Private equity's growing footprint in the housing market is one of the most controversial stories in real estate today. Critics see it as a threat to affordability and community control, while others see it as a way to increase the housing stock. One thing is clear. The affordability crisis isn't going away. The U.S. needs millions of units, and fast. Governments can't fund the gap alone. So the question isn't whether private capital will play a role. It's what kind of role it should play.